Hello, future real estate professionals, and welcome back to the Colibri Real Estate channel, where we're changing lives one home at a time. I'm Sue Willoughby, a licensed real estate advisor with nearly a decade of experience in the state of Washington. And I've been a real estate instructor with Colibri for the past 3 years. I'm passionate about sharing real-world insights and helping you turn your real estate career dreams into a reality. Today, we're going to dive into the fascinating topic of property taxes, specifically focusing on how they're calculated using different homestead exemptions. Understanding this is crucial to both homeowners and real estate professionals, so let's break it down step by step. To figure out property taxes, you typically take the assessed value of the property and multiply it by the tax rate. This will give you the tax liability, or the amount of tax that is actually due. However, if the property qualifies, and not all properties do, if it qualifies for the homestead exemptions, then the calculations are going to change. So let's explore the different scenarios based on property value. In the first scenario, we're looking at a property with a value of $50,000 or less. So for homestead properties, this qualifies for a $25,000 basic homestead tax exemption. So here's how we calculate it. We're going to take the assessed value times the tax rate. That's going to give us our total tax liability. Then we're going to take the $25,000 exemption times the tax rate, and that will calculate our tax savings. So we've got our tax liability, which is the total tax, minus the tax savings, and that will equal the property taxes that are due. This means that you subtract tax savings that are calculated from the exemption from the total tax liability to get the amount of property taxes due. In our second scenario, the property value is going to be between $50,001 and $75,000. So this is a slightly different value bracket. And here, the property qualifies for 2 homestead exemptions. The first $25,000 applies to the properties up to $50,000 in value, and then the second $25,000 exemption applies to the portion of the value over $50,000. So here's how we're going to break this down. We get the assessed value, so it's going to be somewhere between $50,001 and multiply that by the tax rate, whatever that tax rate is, and that's going to give us our total tax liability to start off with. Then we'll take that first $25,000 tax exemption, multiply it by the tax rate, and that will give us our first savings. This first tax savings will apply to the city, county, and school board. Then we're going to take that second $25,000, we're going to multiply it by the tax rate, and then that will equal our second tax savings. Now this tax savings applies to the city and the county only, not the school board. Then we're going to take our total tax savings, we're going to add tax savings 1 plus tax savings 2, and that will equal our total tax savings. So we've got our full tax liability that we started out with based on the value of the property, minus the total tax savings, and that will equal the property taxes due. Don't you just love taxes? This means that you add the savings from both tax exemptions together and then subtract that total tax savings from the total tax liability to get the amount of tax that you'll pay. In our third scenario, the property value is $75,000 and up. Here, the property qualifies for the full $50,000 homestead exemption. The calculation is as follows. The assessed value, we know this is going to be upward of $75,000, so the assessed value times the tax rate is going to equal our tax liability. I think you're seeing a theme here. So the first $25,000 exemption, you're going to take that $25,000, multiply it by the tax rate, and then that will equal our first tax savings, which applies once again to the city, county, and school board. And then the second $25,000 exemption times the tax rate, that will equal our second tax savings, which applies to the city and the county only, not the school board. Total tax savings equals the first tax savings plus the second tax savings. Then the final step is to take the tax liability that we calculated initially, subtract the total tax savings, and that's going to equal the property taxes due. Again, you add both of the tax savings from both of the exemptions and then subtract that from your total tax liability. For these examples, I haven't used specific numbers, but you can find plenty of examples in your textbook. The key takeaway here is to understand the three possible ways that property taxes can be calculated for a homestead property. These are all going to be based on the property's value. Now, this is the assessed value and not the market value. Learn and memorize these scenarios, and you'll have no problem with them on your exam. Well, that's it for today's session on property taxes and homestead exemptions. I hope this helps you understand how to approach these kinds of calculations when you get to the exam. Once again, thanks for watching, and if you found this video helpful, don't forget to hit that like button and subscribe to the Colibri Real Estate channel for more tips and tricks. Good luck, and I will see you in the next one.